Hello and welcome to another update video about XRP. Just a quick one. I only updated XRP, I think it was yesterday. So just to let you know, guys, we are still on track. The primary expectation is further downside for XRP just due to the weakness in the chart. I alluded to the long-term weakness in the chart anyway. I know there are a lot of XRP fans out there and I hope I'm wrong. But if a coin in a new bull run doesn't make a higher low, a higher high, that is not a good sign. And there are a lot of coins out there that haven't done that in 2021, that have missed out on making a higher high. One of them is IOTA. I think XLM is another one. So it's just to be on the side of caution with these coins. So you have sort of this higher level concern, and then also on the lower time frame we see the weakness. Now that could of course be related, because XRP really hasn't moved too much recently, and mostly sideways movement. The way we can understand this is that from this swing high here at 39 cents, we started a decline in 5 waves, out of which we probably have already seen, that is what we can assume at the moment, a wave 1, here a wave 2 retracement, and we're now in the wave 3. I talked in the previous video about us possibly reaching the 27 cent range in this wave 3. That is how it would normally work out. Then a wave 4 retracement and a wave 5 down, and then we could say it's complete, this correction. So this bearish view remains primary expectation until we get above the wave 2 high here. So should we impulsively break above 37 cents, then we need to rethink this assumption, but for now we can focus on lower. That's how I would see this. And in this wave 3 in white, it looks like we've done a wave 1 and we are now in a wave 2 retracement. So here the wave 1 in yellow highlighted 5 waves can be counted down. And then here an A, B, C, I talked about that yesterday. And at any point in time, we could now break out to the downside. Can you see this triangle here? That's a possible breakout pattern. Again, there's different ways of drawing this triangle shape. It is just highlighting that we are getting here close to an apex. Yeah, not quite there yet, but the way this looks to me is that we had a fake out to the upside, which is not bullish. And if we take a look at this wave count, we can understand this as an ABC correction, possibly finished, and we will move down. Best indication that we are breaking down is the swing low here at 32.1 cents. And if we then break to 31.8, of course, this is the ultimate confirmation that we go down lower, possibly then to the 27 cent level, but not in one go. There will be ups and downs along the way. We currently only see a very shallow retracement in the wave 2. That's the only thing, the only flaw in this chart here at the moment. There's nothing that would stop us counting that as a wave 2 at the moment. There's no law in the Elliott Wave, in the Elliott Wave rules that tell us that a wave 2 needs to retrace to a certain degree. There are in practice shallow wave 2 retracements. However, we haven't even reached the 38.2% fib level, as you can see here, which is at 33.8 cents. We haven't even reached that. So for now, I mean, ideally, I would want to see a little bit more upside here in a wave 2, because that's what we normally like to see. We normally like to see wave behavior that is in line with what you would reasonably or normally expect, what most often happens. But again, there's no law that doesn't tell us that a wave 2 couldn't already be finished before it reaches the 38.2% fib level. That is how I see the market right now, and I would expect a sell-off soon. Exception is if we now break out above the swing high here, the 33.6 cent level, the previous wave A high. By the way, we talked about this resistance level in the previous video as well. So apparently we touched it and got rejected. But if we break above this, then this would not be bullish. This would rather confirm a wave 2 and would actually lead us closer to the ideal levels for a wave 2, because normally you would expect the 38.2% fib level at 33.8 cents. That's the first key level. Yeah, and if we break above that, it would be the 34.2, no, 34, what is it? 34.4, so 34.5 cent level. That's the 50% fib retracement. I mean, normally you would expect those two levels at least in a wave 2. So keep an eye on these levels. And even above that, the 35.1 cent level would be possible, the 61.8% fib level. As I said, only really if we break above the 37.1 cent level here, we can challenge the bearish case. That is how bearish this chart is currently looking like. So for me at the moment, the trend is further down. In addition, you can draw a trend line here that might become relevant. It's only 2 touch points at the moment, but it might become one that will be relevant. So yeah, if we see some further upside, this trend line might restrict us to break out further. That would be pretty much in line with those fib levels that you would normally expect for a wave 2. So I gave you all key levels in this video, just a quick update really, and just to mention to you that we are still on track down. Okay, and that's my update about XRP. So hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.